Good afternoon, traders. It's Simon at Kairos Capital Markets with the weekly review of Aussie dollar, pound yen, euro dollar, and Bitcoin. So we're going to start with Aussie dollar again as usual. I know it's only been a few days ago since I last done one because we started through last week, midway through this week, but we can just continue on as usual. So on this Aussie dollar, I did expect it to crawl up a little bit more to at least a 382, which it hadn't done. It did break back down again. On a weekly perspective now, for me, I wouldn't want to buy or sell this at the moment because you got, no matter what way you go, you're going to hit resistance of some sort or another, a heavy resistance as well. So if you want to short to the downside, there's a zoom out for you here on the weekly perspective. You got this three touch trend line and you're right next to it here, so I don't want to sell into that area whatsoever. Plus you've not had a pullback, so the market isn't really breathing. And then if you want to buy, you're going to buy back into the 0.77 area. So for the Aussie dollar, I'm not particularly happy with trading it whatsoever. I mean, I could make a case for a bullish signal right now. This is like a double, triple top bottom there. Another move down here. And what does make it interesting is this high volume inside bar here, which does tell me that I think the market will move up, but how far up I don't know, and I wouldn't want to take a long-term position long on just this little candle here because it doesn't give you enough emphasis. At the same time though, we're going to go now look at the DXY and the US dollar indexes to come back to this, and you can see now that we respected the trend line like I expected last week, and we moved back up to the top of the range for the end of this week. So the dollar hasn't changed its trend, it's just sitting around doing nothing right now. A lot of dollar pairs look like they need a little bit of a pullback as well, so you may find that the dollar just moves down a little bit this week, then hopefully we'll break out to the upside eventually. The DXY, very similar story. You've got this kind of area here at the bottom, which is where it's been capped, and you've got the longer term downward sloping trend line where price is at right now. So for this now to happen, high volume on dollar pairs to break up to the upside, that will confirm your dollar bull move to happen over the next couple of quarters or so. So like I said, with Aussie dollar, we moved down quite far, we have already. That's what makes me think this will now most likely move up, just because of the way everything is at the moment. Now, euro dollar, we broke the upward sloping trend line to the downside, as you can see here. Now, normally I'd turn and say, yeah, that's really good, fantastic, let's go. But this trend line has been in place since August 2017, so almost a year now. And to break out to the downside of this trend line, I'll zoom in very quickly to you here, and my mouse has gone crazy again. It's not on exceedingly high volume, it's actually on lower volume than the candle before. So for me that indicates a fake to the downside, and I do feel that the euro then will most likely at least have a move up to the upside Monday, Tuesday most likely. When you come down to the lower time frames, I had this in line for last week, what I was looking for. It did move up like I expected it to and done this. And now we're back down to the same level again. So what I'm going to do is, we're going to delete all the lines here quickly. And we'll just slap one in round about, well, you've got one level there definitely. You've got 1, 2, 3, 4 touches, fifth one there. So 122.6 is definitely level there. You've got a lower level around here as well. So for me personally, if you want to know when this has changed, you need to see a break lower than this low here. So if price comes down to like this level here, like that, just down to 121, 122, and that's kind of created a double bottom on the 4-hour chart, but that means on 122, you've actually broken down below here you have, and then the pullback to the daily 50 and take a trade short. That would be most likely what I'd like to see if I could do that. But I just think that it just grind up a little bit, especially where we are right now at this key level here. Pound yen, now obviously you know with Vlad last week, he actually put a view up for a medium term like trade to the downside, and we're just waiting. Here this move upwards higher than what it was here was a bit of a fake out by the looks of it. It's moved back down again, but we are now right at this trend line again, where on the lower time frame you can see it wanting to give you support there. The only problem is though, if you do trade into it, you're going to trade back into the 152 area, which has been key several months in the past of 2017, back in 2017 in September, October time. So really with this trade as well, we're just at this point where right now I wouldn't want to buy right now because the volume to the downside has been quite good. So you got this rejection candle here, you had this fake move up, another move to move down to confirm the fake move. Then you had the volume pick up, bigger candle, bigger volume, slightly smaller candle, slightly lower volume, which means the market is breathing. This move down is valid. It's a valid move down. And when you come down to the lower time frames, you've got something like this in you. And this is the 4-hour chart, and this is where you get your problems now. How do you draw your trend lines? That's a really, really key question. I'm going to delete all the lines here. So how do you draw your trend lines? Now, I used to draw them for the open close of the candles. You could do that one, or you could say, well, that's the best line because you got open close here, 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 a fake out there, here, and then you got the move down. But if you think that move down is valid, then you look at how it's been formed with volume. Where's most of the volume happen? Most of the volume happened that day on a doji, and then the market just moved down on very, very low volume. So for me, that's a fake move down, that is, again. And that's your problem you have. I don't think selling the market would be very good right now. Whereas if you put a level at 152, just here, and we zoom out now, you can see 152 across this level, multiple support and resistance, 1, 2, look at there, 3, 4, 5, 6. So 152 would definitely be an ideal trade to take short, because you're going to have the key level plus you got the 4-hour 50, which I think is a good idea. And if you then just do the Fibonacci from, say, this way here like that, you've got the 618, or if you do this one, you've got at least the 0.382 / 0.5. So you've got one or the other there as well. So for me personally, if you can get something like this here, get entry there, tuck your stop behind this level here, the old R1, target the Fibonacci extension minus 0.27 at this level here, and you've got 2.8% trade. If, however, you think you could go further, you could target one. I think, personally myself, I think once it breaks down this trend line here, I do believe it will go down to 148. And if you've got 148 on your chart here, that's a 6% trade there. You might need a slightly bigger stop if you're going to hold it that way, so you can get 4.5% trade or so. So that's an idea, but it's not established yet. That's the only problem. And like I said, it depends on how you draw your trend line to how you'd want to trade that. Now the last one is Bitcoin, and this will surprise you guys. I'm looking more towards a bullish view now of Bitcoin, and my main reason for that at the moment is this: with this bullish engulfing candle off the 6850 level, which has been support and resistance in the past with high volume. Now for me personally, the volume it wasn't massive volume, but it's higher than most it was. It then grinded around, did nothing, and then the break above the daily 50 is done on higher than average volume, which says to me this could go higher. So for me, I need to find some proper bullish structure to this trade now, if I was to start buying Bitcoin. And on the 4-hour chart, I haven't got a higher low yet on this chart really. This isn't really a higher low. So I'll be looking now at a pullback to $8,300 level, where the 4-hour 50 links up with this. That's what I'm looking for. That is what I think would be good value there. And maybe start buying some cryptocurrencies using the Bitcoin from there. That'd be good value, that would be. And it gives you a bit more of a structure. You may find as well, though, you get something. This could be a head and shoulder pattern. So let me show you what we've got here: an inverse head and shoulder pattern. You got your right shoulder there. There's your neckline. This is your head. That's your neckline, and you could come down to this level here. Could come down to $7,500. That there would then put an inverse head and shoulder pattern with a triangle at the bottom of it, and that's happened over a few months. Now that would give you a similar move to what's kind of happened up here. Maybe not as massive, but you'd definitely get up to $11,000. So you could buy your Bitcoin here at say 7,500, 8,000 roughly, 7/8 around this kind of area here, exchange into what you want to do or hold and whatever. Then you can take your trade up to the next level, the 1-to-1 pattern distance. And the 1-to-1 pattern distance on this trade here, let me just double check that. 1 second guys, sorry about that. Won't be as big as that. That there. Yes, 11,500 you are. So you can make it can move from 7.5 to 11.5 fairly well now. And the other thing I said, the only thing I do have a problem with this, although I don't think it's a massive problem, the one thing I'd like to highlight is this, which still makes me think it's good. You had 2 pin bars here. Rejected the $9,000 level, and then you had this bearish candle here, but extremely high volume. In fact, the 4-hour volume here was almost as high as this one here. I'd expect that this candle to move quite a lot, and it hasn't. So for me personally, I would say that the volume for that was retail traders selling and the institutional traders just buying a bit more or something, because it didn't go down. That's the thing. It never went down at all. It just got absorbed and didn't go anywhere. So that high volume there does indicate that it struggled to go down, which means I think we get a fake move downwards for a few more days, and then we could rally back up again. So again, we've got to see how it happens, how it reacts, but it's looking a bit more bullish than what it was only a few days ago. Alright guys, any questions, give us a shout. If not, I'll speak to you soon. Take care.